مثلا انا متى اقول ستوب. Yes, welcome back to our discussion. The third chapter on our financial accounting is qualitative characteristics of financial information. Now, what is financial information? Now, so relatively we know financial information is nothing but a little more than a financial statement. A financial statement is income statement. If I use the old names, profit and loss account, balance sheet, cash flow, statement of gains and equity, and notes. So any user who want to have an understanding on the business, they need to have an access to this financial information. So when this financial information is given to someone, that financial information cannot be anything. You know, like in a company, we have different designations. We have general managers, we have finance managers, we have operation team, we have office boy, we also have security guard. If a financial information is produced by an office boy, is it very valuable? It's not valid. It's not that authentic. So, what this chapter we are going to talk about, what are the qualities, what are the characteristics? Qualities, characteristics.
صفات.
Shifat. That qualities we need to understand. For you to say that, okay, this financial information I can trust. This financial information is good. This financial information is valuable for our decision making. That's what we're going to understand in this chapter. In here, this team, the IASB, International Accounting Standards Board, has something called Conceptual Framework. Now, last week we talked about Quran and Tafsir. Same story. This framework is not IFRS. The conceptual framework is not IFRS. Same like Tafsir is not Quran. Quran is the authentic book revealed by Almighty, and no one can challenge or question on that. Same story. The IFRS is the final document developed by IASB, but the conceptual framework is a support given to make an understanding as to how strong the IFRS is. So that's what you have to make an understanding. See, it's the basis on which IFRS are formulated, but it's not. Please remember, it's not an accounting standard. Multiple choice questions going to come. So they will twist you. So this important information is required. And wherever new accounting standard is issued, it will be based on the principles of the conceptual framework. So now I'm reading IAS 1. If I to read IAS 1, let me see, I have internet already, yes. See here.
Do they have a public website or something where they release this IAS?
IASB. Yeah, they have websites. But the problem is, brother, you will not get the complete document in the website because they are selling. So you need to pay. If you pay, then you will get a bulky PDF which has everything. Now I remember when we study our final studies of CA, I purchased a book of this size, complete IFRS, but in Sri Lankan context, Sri Lankan accounting standards. This will come. Okay, anyway, let it come. So that's what I wanted to say. This is a support for us to develop any accounting standards. Now, somebody sent me a question asking what is convergence. Now,
What is what?
convergence. This now it's a bit applicable to discuss at this point of time. In the world, what do you think, who is the powerful country?
For now,
US.
US. US is the powerful country. In terms of accounting also, they have a powerful body named US GAAP. You know CPA exams? CPA exams are based on US GAAP. And if you see any UK exams, ACCA, CIMA, CA, what do you call that, ICA of England and Wales, or any other exams from a country who are associated with UK, they all will follow IFRS. But the US only, no. I am going to follow only US GAAP. So the US GAAP has their own way of issuing accounting standards, and it's almost different to IFRS. Whatever the topic you take, the way IFRS says and the way US GAAP says, there's a difference. If you really pick one example, accounting for leases. The vehicle, when you buy a vehicle, you go to bank, the bank pays it to the dealer, you get the car, and then you pay monthly to the bank. This arrangement is generally we call it lease. So how we record that in our books? IFRS speaks about one particular method, that is IAS 17 before, and the US GAAP had their own way of accounting it. Now, when these people like us, we are users or we are practitioners or we are the people who prepare financial statements, and if we happen to encounter to present my financial statement, one in UK, one in US, then I have to prepare two sets. It will be a bit of a cumbersome for me, difficult. Sometimes I don't understand what this language of US people says. Even sometimes you don't understand the English what they speak.
And also you need to know what kind of
Exactly, that's what I'm saying. I'm just telling you in the very basic bottom line scenario, especially their accent. English accent itself, you don't sometimes understand. So, but as a preparer, then these people at the top level from IFRS or IASB group, they went and had a discussion with the US GAAP team. They said, my friend, let's not confuse the users. Let's have one single accounting rule. Let it be your business is in US or your business in UK or in Qatar or in South America or South Africa, anywhere. Let's have one single accounting standards or accounting rules, I would say. So UK sitting here, US sitting here. Then we then have to bring one single rule. So for the same problem, they have rule A, US have rule B. Now you then have to bring one single rule. So you need to move towards to become one. But the problem is, US people say, no, I am not going to vote. You come. This is the process known as convergence. UK now agreed to that. And then this is gradually changing their accounting standards to in line with US GAAP. So then that will become like this. That's how the IAS 17 they cancelled. And then they brought IFRS 16. IFRS 16 is in compliance with US GAAP. Anyway, coming back to the discussion here, when I want to introduce a new accounting standard, the preparers may not understand the required steps. That is step, this will tell you. You refer this book. This will give you guidance. So that's exactly the conceptual framework is all about. Is that clear? Very clear? Good. See, the conceptual framework, this is a book actually, has 8 chapters. How many chapters? 8 chapters. At F3 level, you really don't need to remember all these 8 chapters, but you need to understand the content. That's all.
Is there any question based on these things?
Definitely yes. Multiple choice questions going to come. I will pinpoint precisely where the questions is going to be tackled. The objective of general purpose financial reporting. And you see, this asterisk mark means those are the only chapters that is examinable for F3. So this will be examinable. Qualitative characteristics of useful financial information. Examinable. Financial statements and reporting entity. Examinable. Elements of financial statement. Examinable. But please remember, we have discussed most of them already.
Yeah, elements, financial statement.
I have discussed these 2 already. I didn't have to discuss, even this we have discussed in a different way. So these 4 chapters or sections only examinable for F3. These will be tested at the next level. So for that now you can just relax. Okay, 50% only we need to know. Okay, very interesting. This is another concept, accounting concept called going concern. Okay, I will keep like this. Now tell me someone what you mean by going concern. What time we are going, or what time during Ramadan time, what time we are stopping the class. Is that going concern? What is going concern?
Going concern is a concern, the entity continues the work without any difficulties, or it is written we are going to continue until we achieve the objective.
Okay, one interpretation. Sir, you?
Going concern, we can say that it is already running.
Running. Adil?
How it's working? It's going to, the business going to run? The way
Yes, sir. No idea. Okay, now let's say if you see outside here, so many bakalas. Now this one bakala man you go and ask, are you going to close the business tomorrow? What did answer will say? Sometime he might hit us. Any business when someone is starting new, their intention, their expectation, their dream is to continue the business for a unended period of time. Even I am dying, my children die, my grandchildren die, still the business needs to be there. So when a business, the concept here what is saying is, whatever the new business you starting, that business should continue for a long period of time. In mathematics, we use this symbol.
infinity.
This symbol means it will continue. See, it's not ending, no? If you start here, it goes like this. That we call it infinitive. If I to write, infinitive. And also like train road. No, it's going on, but the train road anyway somewhere it stops. But the going concern, so when you prepare a financial statement, okay, now Baha, you tell me, in this shop they are selling perfume, okay, and they have this table. Now in the financial statement of this shop, perfume, what type of asset they will show? Perfume is what in this business. What is their business?
It's perfumes.
Buying and selling
Yes.
perfumes.
Yes.
So the perfume available here, is it an asset? First of all,
Inventory.
Exactly. It is an inventory. Inventory is what type of asset? We studied two types of assets. We studied non-current assets and we studied current assets. So inventory is what?
Current.
Current asset. And why we say that? Inventory going to be sold soon and the inventory will get converted to cash or to receivable. Correct? So that cycle is within 12 months.
Yes.
What about this table?
Also assets.
Asset, okay, what type of asset?
And current asset. Non-current.
Non-current asset. Why we say that? No matter I am buying and selling inventory, I mean perfume, I am not going to do anything with this table. All I am doing is, morning I am coming, sitting here and I am busy doing work and I am going in the evening. So for the last 2 years, 3 years, 5 years, this table is with me. See, this perfume shop, that means if the table is here for last 5 years, that means the business also there for 5 years. And do you have any thinking that for the next day you are going to close this? When you are day-to-day operating this business, you don't have such thinking, right? And then you will think, okay, this table will be with me for a period more than how many months? 12 months. And more than 12 months, can we say that more than only 2 years? Can we say that?
No.
Can we say that 5 years? Can we say that 10 years? No. But only point I can say is that this will be with me for a period more than 12 months. Now coming back to where's that? The word going concern, when you prepare a financial statement, we have statement of financial position. What is the old name? Balance sheet. The balance sheet we dividing into two headings, current and non-current. But then we making an assumption there. This financial statement for this business and that business is lasting for a period more than 12 months and for a long period of time which we don't know. And here we also don't have any intention to close the business. Furthermore, let's say the same shop have 4 branches. What is the name, this perfume shop name? Ajami. Say Ajami, okay? Has 4 branches. One in Maidar, one in Salva Road, one in Doha, one in DFC. Suddenly one day your owner comes and says, Baha, I am closing Salva Road shop. This is happened, happened in November 2021. Total 4 branches, 100%. Now he closed 1 branch. So how many percentage left?
3.
Yeah, percentage. 75% left. In the 2022 May, he comes and says, Baha, I am closing Doha branch. Now what is the percentage left?
50.
So, if you see mathematically, and if you follow, in how many years he will close all business? In another 2 years. Correct? So, again, going concern says 2 points. One says that when you have a business, that business should continue for an unenforceable future period. That means you cannot imagine. Meta vallavaram. We don't know. Furthermore, I am not going to close any of my branches, what they call significant branches. The word significant is important. Why? Let me give you another example. Let's say I am running a hardware shop. I am selling many different items. Bolt, nut, cement, steel, plastic item, timber, wood, everything I am selling. One particular bolt item I am stopped selling. Maybe I have 100 different line items in my shop. I only stopped selling one particular bolt due to some reason. Because of this, do you think I will face a problem in closing my business? No, that is immaterial. That is Kalivalya. It is no significance. But the first example I told you, you have 4 branches. Every year he is closing one branch and another. That means that as the pattern follows, in 2 years to come, you will close one. So, if you to prepare a financial statement with the going concern principle valid, 2 conditions you should meet. 1, you should never close the business for an unenforceable, you see the word. For an unenforceable. This is how the word is. For an unenforceable future period. You cannot even think in your imagination. For an unenforceable future period. So this is condition number 1. Condition number 2, even you will not curtail. See, this scissor, you are cutting it, this word you are using for that, curtailing. Okay, you are squeezing, you are reducing, you are minimizing, you will not do that also. Once you meet these 2 conditions only, you can prepare financial statement as we all, let me see, I have a financial statement here. Yes. Now, if I to show you, this page, I have here current, non-current and current. Only when I can do this, when I have this condition, I will read that for you. The board of directors of the company is satisfied that the company has adequate resources to continue its operation in the foreseeable future with no interruption or curtailment of operation. You have to say this. See, there are 2 things. You should maintain that it is going concern, and you should tell to the user also.
Not to reduce the size, or again foreseeable again.
Foreseeable means unenforceable. Unenforceable, without even you cannot think. For example, now you start driving, okay? Now you are in Maida. You can think of the distance to Doha, can you? You can think of the distance to Dukhan, possible. You can think of the distance to the Saudi border, but can you think the distance to Makkah? Difficult. Then you start keep driving and then you go and close by, okay, some another distance. So we never know where we are going to be end. So that type of a setup you got to see. So just go through this. You will understand what I am saying. 2.3. Okay, just pass. So, is that clear, Adi?
Yeah. Not going to reduce the size of the business, for example.
Exactly. And you will know you have no plan of closing the business. See,
in the
it
near
is my
future.
plan. But tomorrow, for some reason, something goes wrong. And 2.3, and you have to close the business, that is beyond your control. You can't help it.
Something unexpected.
Unexpected. Suddenly pandemic came. How many business closed? In 2017, all businesses in Doha were doing great. Suddenly, month of May, news came. A blockade came up between Saudi, Dubai, Bahrain, and Egypt and Doha. Then many businesses in Doha, and especially this milk, Al-Marai. In fact, they totally closed in Doha. And in Saudi, 40% of the staff they reduced. Because from the production, approximately 40% of the production, they are selling to Qatar. So these are the unforeseen events. At that time, like 2017 January, or February, or March, the management of Al-Marai have ever thought that they are going to close the business? No. Based on that only, they prepare the financial statement. Is that very clear now? So this is what the going concern concept is. Now we studied, please remember, as we continue the discussion, I am going to discuss different accounting concept. I discussed one concept, business entity concept. Second concept I studied materiality. Did we discuss, correct? The 5,000 example. The second concept, materiality. Item is material when you including or omitting would lead to economic users decision. We talked about this. So second, now this is the third. So please keep a separate note about, I would request you to maintain two separate notes. One is to note down separately those accounting concepts, and the other one, as I am discussing now from after this chapter, we are going to talk about many accounting standards. Keep a separate book or a small Excel sheet just to note down. These are the topics we covered like that. Okay. Let me first arrange my financial statement. Otherwise, the client will kill me.
So I have one doubt.
Yeah, you can have two doubts also, no problem.
In the Articles of Association,
Yes.
there is a clause called this business will continue 10 Georgian years. What is the relation between this
That
and that?
exactly the going concern is.
So if that is the case, the period is defined.
No.
10 Georgian years. Otherwise, the auditors will say you have to extend or something like that.
No. This is, you can't give such a what you call defined years. If you give defined years, that means you are violating the going concern concept. Simple. I have to see that clause.
Yeah, that's okay.
Can you please
Because
send me that?
in the audit report, they told your period is expired, so you have to make the amendment by passing a board resolution to extend the period. So we have
You
passed
have to extend the period, meaning to keep it open or to give another set of
another
years?
set of period.
No,
That is one thing.
okay.
Second, the new company formation time, they mentioned 25 years Georgian period.
The Georgian years are what? Calendar
Calendar.
years?
Around it.
Huh?
This.
So then, that means your nature of business is not 100% based on this going concern. Now you know Qatar Electric and Water Company have plants. Example, one plant inside Rasla Farm, not one, actually they have three. So when they form in this plant, they made a joint venture with another foreign company. Then say just sign an agreement, you could run this plant only for 25 years. So that financial statement, when you happen to see, they will clearly say this. But for a normal business, you cannot have such condition. So I'm a bit strange to hear what you are saying.
But is there any rule? Because Qatar, they mentioned in the Articles of Association, you have to mention the Georgian period.
Then that means you are precisely know that this many years you are going to close the business. Then that business is not going to meet the going concern concept.
That's right. There is a conflict. no?
Yeah, that's a conflict. I want to see that.
I will show that.
Please. Anyway, so let's come to this. You see, let's read now. The financial statements are normally prepared on the assumption. See, word assumption means there is no law. It's not legal mandatory thing. It's just an assumption. It's some experience management thinking that an entity is going concern and will continue operation for the foreseeable future. For the foreseeable future. Hence, it is assumed that the entity has neither the intention nor the need to enter into liquidation. The word liquidation means to close. So they are saying neither. And this is the usage of the words in English. Neither nor means they will never do this. Or cease trading. Cease word means closing. So they will not liquidate, they will not close. If such an intention or a need exists, the financial statement may have to be prepared on a different basis. Now let's say a business, you now clearly know that the going concern is not valid. Could you then, what the meaning of that actually? Meaning is that brothers, anytime you could close the business. Even tomorrow, you could close the business. So, if I would close the business tomorrow, can I have non-current asset with me? I have table, okay. The normal character of a table is a non-current asset. That means that this should be with me for the next more than 12 months. But I am going to close the business tomorrow. Could I be having that still?
No.
For some way I will get rid of this, right?
We will sell all those things.
Exactly. So the table originally was a non-current asset. If the business is not having going concern, you need to reclassify all your non-current asset to current asset. Further, you will also have liabilities. Sometimes you may have taken a bank loan. Normally, a bank loan you are settling in more than 12 months. We show as a non-current liability. But if your business will close in 2 months, and if the bank get to know this, they will sleep. They will come with a big knife. Ah, my friend, what happened? Suala. You have to settle immediately. Then all your non-current liability should be reclassified to. That's what we say, prepare on a different basis. If so, financial statement describe the basis used. That is part of the. So can we write this small note?
If
Yeah.
that is the case,
Yes.
if any organization
Hmm.
creating for a specific purpose
Correct.
or objective of contract basis,
Yes.
now how it
5 years or 10 years, that time you would specifically mention that as a note in your financial statement. This business is formed only for 5 years. And the basis is like this. That has to be
as a
said.
branch
Yeah,
or
anything, especially joint venture. Now, Qatar Petroleum engages with lot of joint ventures. And that joint ventures for 10 years. Now, in the last 4 or 5 years before, I used to know several companies. But now, no companies are here. Example, Occidental Petroleum. Occidental Petroleum was one of the big joint venture. Qatar Petroleum had with one US company. Now no more Occidental Petroleum. That's closed. All the staff of Occidental Petroleum taken by QP and put it under QP payroll. Likewise, I'll give you another example. Gulf Drilling International, GDI. It's a joint venture formed by a Japanese company and Qatar Petroleum. After 17 years, they completed the platform. Their job is to set up drilling platform, platform in offshore, in the middle of the sea. So that people can go and stay, helicopters can come and land, and then they can do the extraction of oil work. So they finished the work and then joint venture agreement finished, so the business finished, everything closed. So in that case,
General Electric, they open a branch
hmm,
for installation of power to Kahan Mine,
Yes.
Kaslafan.
correct.
And Iberdrola,
Hmm.
they open for a water
What do you call that? The desalination.
desalination plant.
Desalination plant.
So once that project is completed,
Colors, you will close. Operationally you will close. So in the financial statement also, you need to say that. So can we write this one note?
That is,
Oh, yeah.
that is right.
Yeah. Okay. Okay. So I will change the color of the pen because ink is finishing now. Every business will continue for an Wow.